All right, everybody, welcome. My name is Clint Losch, and with me today is my colleague Roy Innella. Hey, Roy.
How you doing?
All right, so before for everybody that's on, before we jump into today, I just want to go through a few logistical items. So a couple things, especially if you're watching this live, you're going to get the recording. We always send out the recording and the slides after this. If you're watching this as a recording, you'll hopefully see the slides below this as a download, and additionally, anybody live. Certainly ask questions as we're going through. There's going to be time at the end for some Q&A, and then as well, we do plan on making this available as a recording, so we know people are going to be watching this on their own time. So if you have questions and you're watching this as a recording, below this video should be a box for you to type in your questions, and we'll get back to you within right away, or certainly within 24 hours. So with that being said, let's just dive into things. I'm sure folks on here have been on previous webinars. There's always a lot of the getting to know you type of stuff, but there's a lot that we wanted to cover today. I think we'll just jump right into it. You'll learn a little bit more about us, especially about Roy, as we're going through. But let's just jump right into the good stuff here, and let's get rocking and rolling. So first thing, Roy, before we jump in, we're talking about supercharging a retirement fund without rating the reserves of your business. Obviously, that's the title. We can see here that this is really targeted for business owners only because they have their own unique circumstances when it comes to retirement planning. But talk to me a little bit, and talk to everybody here listening a little bit about why you even wanted to present on this topic and talk about this topic.
Well, in my travels through business, I've been in the business world for over 40 years, and I ran across this strategy, and I thought it was great because it addresses multiple problems for business owners. One being a tax issue, and the other being building up a good retirement plan. So I just thought that this is a solution that a lot of business owners really can use and use to their advantage.
Perfect, perfect. So, with that being said, we talk about how, yes, this is for business owners, but, let's talk a little bit more specifically, really about, who this is for. Yes, it's for business owners, but it's really for business owners that might be experiencing certain things or going through certain circumstances. So, let's go through and again, for everybody listening, this is going to be kind of an interview style webinar, talking back and forth. I kind of know the path that, Roy's going to be going with the conversation today. So I prepared the slides. We put them together so you'll have the visual aspect as well as the conversation piece. So Roy, talk to me a little bit about, who this presentation is for, based upon maybe the experiences or the things that some of these business owners are going through, where today's presentation will make sense for them.
Well, first of all, we don't want to mislead anybody. I mean, you have to be a profitable business to be able to use these strategies and tactics. And also, if you want to retire someday and keep your current lifestyle and possibly even a better lifestyle, and also if you don't have a defined exit strategy and you're just wondering what to do, this kind of pulls things together. And lastly, if you want to maximize tax efficiency, both before, during, and after retirement, a lot of people come to me that have a tax problem in a current year, and we can use this in current and multiple years going forward.
Yeah, and especially the interesting thing that I see there is the idea of current or better lifestyle. I think people, they get to the retirement and they either have to sell their business or live off a certain pool of money. They think they've really got to scale back. But I think what you had told me and what you're going to share today is that not necessarily the case. You can actually really set yourself up pretty well, maybe better than you expected for retirement, right?
Absolutely. It just requires an open mind and, just doing things the right way.
Awesome. So, with that being said, let's talk a little bit about exactly what we're going to get into today and what are some of the strategies. So, Roy, walk us through what we can expect to learn, as we go through over the next, 30, 45 minutes or so.
Sure. Well, first of all, this is a little known strategy. 95% of business owners are not taking advantage of a way to supercharge their retirement plan without rating the reserves of their business. This only requires a cash flow, to be quite honest. Um, and it's an easy, viable, and attractive exit strategy, and it makes transition easy for a new buyer because we have some things that are available to us that we can pass on to the new buyer to make selling a business more attractive. Um, it also creates a retirement fund, which we can maximize tax deductions on contributions going into the plan, and also eliminate taxes coming out when we're actually retiring. So it's essentially a tax-free retirement. Um, and there are a lot more benefits. This can be um, changed to really affect the business in a way that you want to, depending on what your tax advisor recommends and what we come up with.
Yeah, and I know we're going to get into some of the mechanics later of how this all works. I think certainly the cool thing is really the tax implications. You always think you're going to get taxed somewhere, which at some point you will to a degree, but as you'll show, you can really maximize the tax efficiency of this plan, so that, as you said, you can do this whole thing without taxes coming out. Really, when you're looking to take that money out, so that's pretty cool.
Yeah.
Um, and let's keep talking about it. I know
Yeah.
there's a few other points you want to get to about what folks can expect to go through today.
Well, the first thing is, we say supercharged. It's really you're really uh, boosting your retirement by fourfold in the amount of money that goes in versus the amount of money that comes out. Um, and we one of the another advantage is learning how to overfund your retirement and not have to provide um, for your employees as well. Not that you want to exclude your employees, but you're the owner, you're the one who's taking the risk, so you want to maximize the benefit. Um, and also, this also has a built-in strategy to take care of your heirs, and to sell your business and make it more attractive. So it's a multifold strategy that really solves a lot of issues.
Nice, nice. And we were preparing this webinar. I said, Roy, you got to give me the big promise. Give me the promise that it's one thing that it's kind of talk high level, but what are folks really going to take away from today? So when I said, give me the big promise, here's what you came up with. So walk me through what are some of the promises that you want to make for the business owners listening to today's presentation.
Well, all of them we've already mentioned most of them, and but you're it's a way to build huge cash reserves, be able to use it for retirement, and also transfer that as an exit strategy. In doing this, you're maintaining or improving your lifestyle, and also it's also a way to keep key employees because we can also use this for other employees. Doesn't necessarily have to be the business owner, but you wouldn't want to do this for somebody who wasn't a key employee.
Gotcha. Okay. All right. And then part of that promise, you said, you got a little gift, at the end for everybody listening who certainly stays to the end, right?
Yeah, we'll make it worthwhile for you if you stay with us.
Cool. So everybody listening, stay with us to the end. You're going to get a lot of great information today. So definitely stay to the end, and we'll talk about, certainly how you can take advantage of all this pretty easily, and you can determine if it's certainly, as we'll get through. Like you had said, it's not right for everybody. One of the prerequisites is you got to be profitable. But then, if you fit some of the criteria, we'll talk about, okay, what are the next steps? How do we make this all work? So,
Absolutely.
all right. So business owners always go through, there's a lot that goes into, running the business and, working hard, and they deal with a lot of frustrations, especially when it comes to financial and tax planning. So talk about, certainly based upon your experience, when you've been talking with a lot of business owners, what are the things that they're likely experiencing right now, and maybe one of the reasons, or many of the reasons, why they're even on here or were attracted to this presentation today?
Sure. I know when I was a business owner, all of my ready cash, anything I had available was going into the business, except what I needed to feed my family. And that's true for most business owners, and as they start up. But as a business matures, and you get to a point where you start thinking about, hey, what am I going to do? What's the next step? You're making a lot of money at that point, and tax issues start to arrive, and you haven't built up a retirement plan. So, you really are looking for a way to also pass on the business or sell the business, make money, and retire all at the same time. And can be a frustrating situation for a lot of business owners.
Yeah, yeah, but I'll keep going because I know you have some other points to
Yeah,
make there. So
yeah.
keep firing away.
Also, as I mentioned earlier, you're hoping to sell the business, and a lot of business owners think their business is worth more than it really is. And this is a way to actually make sure you get what you need out of the business, and be able to help the new owner transition into, uh, actually attaining your business. Um, so, a thought that's in the back of my mind always is, will you have enough money doing this, to maintain your senior years? And again, a lot of business owners are playing catch up because they haven't set enough cash for the retirement plan. So now their thinking is, how am I going to do this? So
Right.
this provides a great solution to um, to to solve all those issues. Some actually, just figure, well, I'll just work until I die.
Right. Right. And when we were talking and putting this together, I said, what did you go through? And that's why we put together, I wanted to put together these slides in this way, because it's one thing to talk about strategy. I think it's another important point to say, look, you've been there. What business owners are going through, what they're experiencing. Both, you've been there yourself with your own business, and then working with literally hundreds of business owners at this point. So kind of seeing what everybody's going through. So I think this is good to point out. So certainly the good news is there's a
Yeah,
solution, right?
absolutely. There's only 3 shifts you have to make in your business, and that's what we're going to talk about going forward.
Awesome. So, and then so you mentioned there's 3 core shifts. So a lot of problems that they might be facing. They make some core shifts. When they make those core shifts, these 3 core things that we're going to go through today, talk about, essentially where they are now and how life would be a little bit different, after they make these core shifts. What are they going to experience? What's going to change? How are things going to get better?
Well, first of all, you would know how to successfully fund a huge retirement, even if you didn't have the cash to do it. Secondly, you get the maximum out of the investment you made of time and money that you've thrown into this business. And, when it came to retire, you have enough money. Um, Also, if you have excess profit and taxes, you have a way to write them off and use that to fund your retirement plan. It's very unique.
Nice.
Also, a way to transfer the business to new owners without being stuck in your business and not knowing how to get your money out.
All right, so essentially what I'm seeing a lot of this kind of, and why it's highlighted in red, all these can kind of be summed up where you just don't feel stuck. You don't feel stuck with, not knowing how to get out of the business. You don't feel stuck with figuring out, how are you going to be able to survive on the pool of money that you have in retirement, or figuring out how much you really need. So I think the big theme here is getting unstuck. especially when it comes to retirement and tax planning. Um,
Absolutely.
so, so Roy, we didn't do it in the beginning, but I think it is a good time to talk a little bit about, okay, we mentioned already you've had a business, you've been in the business world for a very long time. You also work one-on-one with business owners. Talk a little bit about your background and how you got here and to today's even our presentation today.
Well, yeah, Clint, I was a business owner. I have over 40 years of business experience with several businesses that I've either started or been involved with. I've had issues with taxes. And it was a frustration for me, and that's why this really hits home. Um, then after I sold my businesses, I really needed something that I was still interested in and could help people with. So I really I transitioned into the insurance and investment world. For the last 12 years, I've been really helping business owners with retirement strategies and funding their retirement plans and maximizing their tax advantages throughout the process.
Awesome. And along those lines, so talk a little bit about in your experience how you came across the opportunity that we're going to talk about today for business owners to really kick into gear their retirement plan.
Mm-hmm. Well, back in '94 is when I first sold. I had a printing business, and I started consulting to a lot of successful businesses for several years after that. And I helped them save money on expenses by mitigating those expenses, and doing various analysis to cut their fixed costs, which ultimately fall to the bottom line, without really affecting the operation of their business. Um, in some cases, I helped them get financing, um, or you know, various tasks that all affected their bottom line. But what I learned most was that business owners felt stuck in their business because they didn't know how to implement an exit strategy. I mean, it's the hardest thing that I had to do before, dissolving my business is figure out, what I was going to do going forward. And, having something planned um, that that actually works for most people without a lot of pain of you know financial pain or knowing how to do that transition is it just solves a lot of problems.
Yeah, yeah, I think that's really cool. It's like you felt the pain yourself. You're like, there's got to be a better way. There's got to be a solution. There certainly is a solution. We're going to get into it today, but it was one of those things where the solution was truly born out of a real problem that you went through, and that certainly still exists um, for business owners every single day. So, um, keep talking a little bit about what you had discovered.
Yeah. Well, as I mentioned earlier, everybody I talked to was frustrated. They were getting hammered with taxes, and yet they didn't have enough cash to put into a retirement plan because of ERISA laws and things like that. They weren't able to do it. So, in my travels, I've bumped into several tax strategies that business owners were missing out on, and I just decided to put two and two together. So, over the last 19 years, we've used this strategy to help thousands of business owners to accomplish their dream and recoup the rewards of their business.
Yeah, I mean, I'm sure nobody really likes to pay taxes, especially overpaying their taxes. So and I think the other point is when you talk about taxes, I mean, this is letter of the tax code type of stuff that people aren't aware of, right? As we get into it a little bit more.
Absolutely. It's just you know it's one of those things. You just somebody has to show you how to do it,
Yeah.
and then you have to implement it. And the biggest thing is keeping an open mind. How to legally, morally, and ethically avoid taxes.
Yeah. All right. So let's start talking about what are those shifts. What are the three things you need to do? So I think what we'll do is we'll start kind of high level, give you the three shifts, talk about what they are in general, and then we're going to break it down a little bit more of the nuts and bolts and the mechanics of how this could work for you. So let's talk about it. So you had already mentioned this one, keeping an open mind. Why do you say keep an open mind? Is it just because, look, it's not something you're likely going to read about when you pick up the magazine at the store, right? This isn't
Exactly.
your standard run-of-the-mill strategy, right?
Yeah, I mean, your accountant isn't going to bring this up because they don't know about it, because it's multiple strategies. We use the CPA to really keep us out of harm's way, but it's also thinking outside the box. We use the current tax laws to your advantage, and we implement cost and tax strategies that enhance your bottom line without affecting workflow or cash flow. Um, Also, we do tax planning in conjunction with tax filing. There is a big difference. It's not. It's really looking at, formally, your CPA may look at what has happened historically and react to that issue. We're going to react proactively and plan ahead so that these these issues are really taken care of before they happen.
Yeah, and then, so kind of the best way when you told me about it and have showed it to me is just like you get to the end of the year, you show your account, look, here's what I've done, try to reduce my taxes based on what I've already done. You're saying, look, beginning of the year starts, have a plan for the entire year. So by the time you get to your accountant, you've already taken these proactive steps to reduce your tax burden.
Exactly. Some of these
Do I
take
have
a
that
year
right?
to
Okay.
implement.
Yeah. And I think it's clear, it's not that, this excludes your CPA in any mean by any means. And I think you would even welcome the conversation with the CPA to work together on it, because your CPA likely knows the ins and outs of your business, very well. It's just that this is just one of those strategies that likely wasn't implemented yet, and how you can kind of work together on both proactive planning and the tax filing, right?
Absolutely, absolutely. Just again, it's keeping an open mind and really use what's historically worked for others.
Sure. And I've seen this before, but I think it makes a lot of sense, right? It's just like
Yeah,
if you don't get the taxes right, nothing else matters. I always use the analogy of like the leaky bucket, right? You can keep dumping money in or dumping water into a bucket to try to fill it up, but if there's holes there, it's just going to keep coming out the bottom. That's kind of how I look at the taxes, right?
yeah, absolutely. That's why I put this quote in here. William Rehnquist, he even said there's nothing wrong with a strategy to avoid the payment of taxes. So, the
And
IRS.
and I'll go ahead, Roy.
No, I just was finishing the quote. So the IRS doesn't prevent that. They really want you to save money on taxes.
Yeah, I think that's a good point, right? And I actually I'll bring in one more quote. It's from a judge. His name was Learned Hand, and I think he said, there's two economies, one for the informed and one for the uninformed. And the uninformed are essentially the ones that will end up paying higher taxes because they just don't know things that other people do know. That by the letter of the law they can um, reduce their tax burden, but just by being aware and being in the know. So those two quotes certainly go hand in hand, and it's also nice coming from a Supreme Court justice as well.
Yeah.
All right. So why tax planning? Talk a little bit about why, where tax planning comes into play. And I had written down a quote, but yeah, talk a little bit about
Yeah.
why tax planning.
Yeah. Well, to most business owners, and if they're profitable, taxes are your biggest expense. And if you do tax planning, you're guaranteed to get results because you're planning ahead. Um, Also, in most cases, you're reducing your chance of audit because you're doing everything to the letter of the law, and crossing every T, dotting every I. So, and also with little planning, you could discover unused tax deductions that could affect you and your family in a positive way personally. So, doing this is a discovery process that can enlighten you in for many years going forward as well. So, it's good to have these in your back pocket.
And yeah, and I think the big point here, right, is when you start talking about proactive strategies and doing things to reduce taxes, I think the initial fear is this going to get me audited? Is this going to raise a red flag? But what you have found over your experience is it's the exact opposite is true, right? So I think that's a really
Absolutely.
good point to hammer home.
Yeah. You have less of a chance of getting audited if you do it the right way. Uh,
Yeah.
you know,
And along those lines, so you've worked with a lot, and you had told me, look, about 80% of business owners, they're just not doing it properly, right?
yeah, as I mentioned, most CPAs are trying to keep you in compliance. That's their main goal, is to keep you out of harm's way. So they're looking in the rearview mirror, and you know, by that time, it's usually too late to save on taxes because they're just trying to jockey you for position so that you don't pay more taxes or make sure you pay the right tax.
Right,
So, I always say don't record history, make it by,
right.
doing your proper tax planning.
And that goes right into defense versus offense, right?
Yeah.
So,
Yeah.
taking that proactive approach.
Absolutely. The key to financial defense, spending less is easier than financial offense, which is making more. You already have that there. So if you protect yourself from it, it's one less thing you have to do. And since taxes are your biggest expense, it makes sense to focus on financial defense. Which is riskier, spending money on promoting the business or cutting costs? Obviously, cutting costs is a known fact. So,
Right. So you think about it like if you wanted more money in retirement, then you got to make more, you got to sell more, you got to advertise more.
right.
But in reality, if going back to the whole leaky bucket analogy, if you just plug up the holes, that bucket's going to get filled a whole lot quicker. So that's what we're talking about is plugging up the holes and then going on defense and reducing the expenses, and that in turn will produce a nice ROI. Um, so all right, so we talked a lot about okay, you need to have an open mind. There are strategies out there that maybe folks aren't aware of, and that you really can start really efficiently and effectively putting money away for retirement. So the next question is, how do we get started? What do we need to do?
Well, Homer's
So good
Simpson.
old, the great literary mind of Homer Simpson.
Yeah, if it's something hard to do, then what's the point? But this isn't so hard to do. That's it. Just requires diligence and paying attention.
So go ahead, ask the
Yes,
question.
and so what do you see when you see this? It's pretty obvious to think outside the box.
Yep. Yep. So that's definitely a great point, again, because it can be very easy to get stuck in the status quo and stuck in your ways. You say, look, this is the way that it's done. It's the way I've always done things. And, if you don't think outside the box, if
Yeah.
you're not open to new strategies, you're probably leaving a lot of money on the table or throwing a lot of money away,
Yeah.
frankly.
I mean, we find, sometimes the gut reaction of some CPAs is they resist this strategies because they're afraid of audit or because they've never heard of it.
Right.
But when we show them the IRS code, it makes them more comfortable.
Yeah, so let's talk about the IRS code real quick. So getting into starting the conversation about how we do it, respect, not fear of the IRS. So along those lines, this is an actual IRS code that you
Yeah.
follow to put this plan in place, right?
Absolutely. I mean, this is the initial code that I mentioned here in this text. Um, but usually we use the IRS rules to our advantage. It states that no taxes are due under certain circumstances. We take advantage of that. We create those certain circumstances.
Right, right.
And you can look this code up for yourself and see what it says. Those are the circumstances which we're about to talk about.
Cool. So now let's get into some of the nuts and bolts, right? The mechanics.
Yeah.
So
So
we'll
how do we
talk
do it?
briefly about the how now. We talked about kind of the why and the what. Let's talk about the how. So go ahead. I'll let you walk through the mechanics of this, and then we're going to get into a diagram as well,
Sure.
how this all works.
So our goal is to create something that doesn't cost us much, but creates uh, a lot of wealth. So create a strategy so that the money going into the plan is tax deductible and is highly leveraged to your benefit. Um, very similar to your traditional retirement plan, but this is many times more effective. Also, allow your funds to grow safely without the risk of loss. Um, you know, we don't want to take risk in a situation that deals with our retirement. As we grow older, we want to reduce our risk. Um, and then, lastly, we want to distribute those funds in the most tax advantaged way. So, these are the essentially the tactics that and the mechanics of what we've developed.
All right. So yeah, you provided this diagram. Is it fine if I put up the arrows right now about
Yeah,
how this
yeah, go
all
ahead.
flows?
And this, may not apply to everybody. Everybody's situation is different. So, it's a general purpose diagram just to give you kind of a flavor of how these things work. But, a funding source loans the business and the business owner money to fund this retirement plan. And it goes into the plan and in the form of a loan. And the loan is essentially your exit plan because that loan is assumable. So you can use that loan as built in financing for a new owner. Yet that same funding source is also funding your retirement. So, I mean, just, as a very highly simplified explanation, that's how it works. You're taking advantage of taxes because it's a loan, and you're using the interest as leverage to fund your retirement plan. So, without getting into the real weeds, that's essentially how it works.
Okay. So, and a question that came in is, if this is a loan, what's the collateral for the loan?
Well, generally, the retirement plan is the collateral, um, and one added benefit to this is really there are no encumbrances to the business. So as this thing matures, it becomes an asset to the business owner, and you know there really is no effect to the business. There's no substantial effect to affecting the finances of the business.
Okay. Okay. And again, every situation is unique depending upon the business. Funding source may be, or the investment used might be different. Funding source might be a little bit different, but this is in general how it's
Yeah,
working.
it's kind of how
Um,
this is pretty much how it works for most people, for most businesses. But it depends on how your business is structured, what your family makeup is, because we dive into pretty much every aspect to make sure it's perfect for your situation.
Okay. Yep, and we'll talk about at the end about how to figure out if it's right for you and depending upon your situation. So we'll get to that towards the end. But going along the lines of the mechanics and how this all works, let's also dive into some numbers. I think numbers are important to see. Here's some real numbers, kind of based upon what you've done in your work previously with business owners. And as we're looking here at this diagram or this breakdown, is you see, okay, your plan, what you came up with versus probably the most common retirement plan, the old 401k there. So I'll let you kind of go through and highlight some of the numbers. I'll try to use my mouse here to point at the numbers you want to go to here. So I'll let you fire away.
Yeah. Well, as everybody knows, there's a lot of fees associated with a 401k. So just right off the bat, if you max out your 401k and you're under 50, essentially that's an $18,000 contribution. Right away, 17,000 is the amount that gets working for you. Whereas in our plan, the whole 18,000, if we were to use 18,000 as the number, we talked about leverage. That 18,000 will bring you 400,000 in contributions to the plan. So right off the bat, you're getting 400,000 working for you from the very beginning of the plan. And then,
so is it worth discussing, or maybe I'm not sure the answer. Is it too detailed to talk about how does 18,000 turn into 400?
well, that's the interest payment on the loan. So
Okay,
um, uh, the loan amount is the 400,000.
gotcha. Okay,
So that over 20 years at 7.1%, which is fairly average. We're starting from day one. You can see that we're $1 million in change versus $770 70,000 in
right. That's this
growth.
line here.
And if you figure the 401k, Uncle Sam is your partner, so he's going to get 35% of that.
Yeah.
With our plan, he gets none of it. And
That's a big deal, and that even finding myself and working many years in the financial industry, I think sometimes people forget that how big that tax hit is when you go take that money out of the 401k. It's a big deal.
yeah, absolutely. And also when you turn 70 and a half, Uncle Sam forces you to draw money out.
Right.
Where uh, in our program that doesn't occur. There is no required minimum distributions. So, looking at the bottom line here, your after tax distributions are almost three times as much as
Wow.
looking at conventional using the same dollars. Of course, most of our business owners want to put a lot more into that, to that plan.
Yeah. So those are the two big things I see is your tax hit under the traditional planning for anybody that's I'll just dump money in my 401k, 270,000 in taxes they're going to pay versus none under this plan. And then obviously, what does everybody want? They want to know how much can I take out every single year? Well, you can take out 90,000 versus 35. I mean, that seems unbelievable, but it's the reality that when you know how to
Yeah,
put the taxes to work really for yourself and not the government.
absolutely. We've done it for 20 years.
Awesome. So moving on forward, how can you get those types of numbers? How can you avoid paying the taxes to the government? So we have what you gave me this diagram here to put in here, the power of indexing. Talk me through what we're seeing here, kind of left to right, and how this works.
Well, we use products that are not affected by the market. However, they're tied to the market upside only. So that in a down year, when the market say turned down 8%, you don't lose anything. You may not make anything, but you don't lose anything. And it stays that way until the market turns around and you ride the coattails of the market up. So if you have no need to catch up, then it's always a positive outcome. And it's a proven fact that if there are no losses in a program like this, especially in retirement, that the growth is substantial. So
Yeah.
that's really the method that we use.
All right. Cool. So now what? So let's take a quote from
Jimmy
fun
Kimmel.
guy Jimmy Kimmel. Yeah.
Yeah. That's the day that ordinary Americans send their money to Washington, D.C., and wealthy Americans send their money to the Caymans. So we all wish.
Right. I think that's how you feel, right? You're like, if I got to avoid taxes, I got to go to the Caymans. That's about the only other option. But actually, I think what you pointed out here as well is that this could be maybe a better and more ethical option than just sending your money to the Caymans.
Absolutely. A lot less risk.
Yeah, so that's a big thing, right? Risk. I'm a very risk averse type of person. I see that. I see limited downside. I see less money going out to the government. I see more money coming in retirement. I like less risk and more money. So let's talk about it. So, folks, we went through this kind of high level, talked a little bit about the mechanics, kind of how it works. Certainly everybody's going to be a little bit different, or maybe quite a bit different in terms of the exact strategy that will work for them. I think important takeaway is there are strategies out there that you can put to work. It's just a matter of knowing what they are, getting some of the details down. And so right now you really have two scenarios. Scenario one is the old status quo, right?
Yeah, you could just do nothing and continue to complain about it and be stuck in your business, and not realize your dream, life becomes uncertain and tough.
Yeah. Yeah. So at this point, you've gone through, the 30 or 40 minutes, however long we've been here. And it's like, okay, this is good information, but, I don't want to do anything. And if that's the case, fine. You're just going to understand you're likely going to be in the situation of paying more taxes when you likely don't need to. But that is certainly an option. Option two is, or scenario B, is you could start implementing, right?
Yeah. Implement the strategy, supercharge your retirement. Get all those tax deductions to benefit your retirement, and then enjoy tax-free benefits, of the plan in retirement. And you have a viable and working exit strategy to transfer that business to another person. Life is awesome. That could even be, could be somebody who, you earmark in your business to transfer.
Yeah, and I think one of my favorite bullet points here is just that life is awesome. I've talked with so many folks, approaching or getting into retirement, and they look back, think about, either regret of things they should have done to get better prepared, or they feel stressed out. Frankly, it's just, look, how am I going to live on this amount of money, and how am I going to make sure I don't outlive it at all? So, now is, so I think this is a good point as well. I'm going to put this in here, right? So yes, you have two options. I would imagine folks are probably still thinking, okay, I kind of get it. You've worked with others. Let's talk about one of the recent case studies that you have, just to get a further sense of, hitting on even maybe some specific scenarios of where this makes sense. So talk about the case study here.
Well, actually, it was about couple of years ago. We had a construction company owner who had an influx of $100K in a windfall profit, taxable cash that at the end of the year he wanted to do something with, and he didn't have a retirement plan, and he wanted to catch up. So his tax liability there was about $35,000 that he wanted to try to avoid. So, he had no estate plan, and also he was not in great health. So, we were able to solve that problem. Um, we
Yeah,
got
so
it.
talk through a little bit,
Yeah.
about how you're able to solve it.
So we got it done before the end of the year. He set the plan in motion, so he could start collecting on the plan at around age 65. Um, we set up the plan and also set up an exit strategy so he could pass the business on to his son, who worked in the business, but he didn't have the money to buy him out. So, and we also set up the estate plan so that he could start collecting income tax free at 65, and his wife could continue taking that income once he passed on tax free.
Awesome.
And all legal, ethical, and moral strategies.
Right. I think, it's interesting here, right? There's a very unique scenario. Windfall. He's got a son. People may be listening and say, I don't have a windfall. I don't have a son. Does it still work for me? I think we'll talk through about, if it can or if it can't. Those aren't the prerequisites by any means, but that's why it can work for so many people, but everybody has a unique situation.
Yeah, it's a very malleable plan.
Right.
It's really can be changed and adjusted to your situation. The two key ingredients are profit and taxes.
So bringing back a core theme today, a little outside the box thinking.
Yep. So you can
So yeah, go ahead.
go ahead. Well, it's a way to get tax-free retirement spending, super fund your retirement, and start earning growth from day one. Um, it also beats any 401k or other conventional retirement plan by at least fourfold without high fees and the tax consequences that you face in retirement. No
Yep.
RMDs. Provides tax deductions immediately, like a conventional retirement plan. And then to take it further, provides estate planning for the family if necessary. Your conventional plans don't do that. They may inherit the money, but then there's a tax situation. Um, so it also, lastly, it makes it easier to attract a buyer for the business because it provides, built-in funding to the new buyer. Now, I will have to qualify that is you don't have to make it an exit strategy. You can continue the plan until you die if you want. If you don't want to sell your business, so it's not mandatory that you sell your business in every scenario.
Yeah, and that's a good point, right? Because again, we've talked about exit strategies, but it's not mandatory. So, and again, when folks look at this, like, okay, again, I kind of get it. There's always the question, especially when it comes to taxes. You could do your own taxes, or you don't have to. Could you do this strategy on your own? The answer is maybe, maybe, right?
Yeah, especially you'd have to know the ERISA laws. You'd have to have a funding source that was cooperative and guarantees the funding. Um, you would need to know the financial products that satisfy the tax ramifications. That could really get you into trouble if it's not done right. And your CPA would have to know everything working in the plan, including what I just mentioned. So if it doesn't cost you anything, why wouldn't you have somebody help you with it?
Yeah, and that's a good point. Just why not? Why not take a look to see and have an expert, certainly like yourself, take a look and give recommendations on how to put this plan in motion. So let's just do a quick recap. We're getting towards the end here. Again, make sure you stay to the end. We'll talk about how to learn if this is right for you, because we will provide some qualifying factors so that you can determine, hey, will this work for my unique business or not? So let's do a quick recap and then we'll jump into it. So, part is you learn the strategy, right? We talked about the strategy.
Yeah, we showed you, something that's, again, most businesses aren't taking advantage of. You can supercharge your retirement plan without rating the reserves of your business and then utilize the taxable extra cash flow efficiently. Um, we showed you how to develop a viable and attractive exit strategy if if that's what you want, and an easier financial transition for a new buyer. Showed you how to create a retirement plan which provides maximum tax deductions going into a retirement plan with little or no taxes coming out. And I showed you why our strategy blows away a conventional 401k by the numbers.
Yeah, yeah, but that's the big one. Again, you always have two options: status quo, conventional options. They're always an option, but there are better options. So, what you need to do, essentially, if you're interested, and I'll pull up all of these here, and I'll say, look, we already said have an open mind, but then part of it is, and I'll if I can jump towards the last bullet is, look, just chat, have a conversation with somebody to guide you through the process. And I'm going to keep, I'll go to another quote. I'll let you, read the quote, explain it.
Old Ronald Reagan was great for quotes. The taxpayer, that's someone who works for the federal government but doesn't have to take the civil service exam.
So here, let's keep going.
Yeah.
So yes, again, two choices. I'll let I'll take it over. Take it over.
I mean, you could continue working, going at the same pace, not knowing, what or how to work a retirement plan or an exit strategy, or you could retire, getting a tax-free income and taking care of your heirs and solving a lot of the issues that are probably in the back of your mind.
Yeah. And, we kind of hit on these again. Scenario A is you keep overpaying taxes, you can be and stay stuck. Life is not so good. Or option B is you can retire comfortably, implement the strategy, get your deductions, have an awesome life, and potentially have a really good exit strategy with some tax-free benefits. So, I went to those points. I think, hopefully that's clear on, what folks can do at this point. I also want to talk about that this program actually isn't for everybody, right? We said, business owners, we provided some qualifying factors leading up to this, but talk a little bit about who this may be for, who it may not be for.
Well, like I mentioned several times in the past, and earlier, is you have to have an influx of taxable profit or cash. This is not for companies that are struggling, and don't have some sort of tax issue, because you don't get a tax deduction if you're not making money. And also, if you're not interested in, transferring your business, it may not be for you. If you want to continue working and, doing what you're doing, maybe that's not for you. Again, if you have a cash flow issue, this won't work. And if you don't need tax deductions, obviously, it won't work either. And if your business isn't profitable, so profit is the key, because that translates to taxation, and and that's it's a primary need. If you don't need the tax deduction, then obviously you're not a good candidate.
Yeah, so that's the big thing, right? It's more about cash flow and having a tax burden currently, as opposed to, an industry or a type, or if you have family members or not, or if you have an exit strategy or not. It's more about, are you profitable? Do you have to pay taxes? Are you tired of paying taxes? So then again, the program is for you, and we'll kind of hit on these quickly at this point.
Yeah, we've mentioned all these earlier, but you want to build and overfund a retirement plan. You have profits that you're overpaying taxes on. You need tax write-offs for now and future profits. You may want to transfer or sell your business, but you can't risk to take the payout over time. You don't want to share this plan with your employees.
Right.
And also, you may have someone in the business that's, a key man that you want to take care of, and maybe they want to buy the business.
Okay. So getting to the end here, certainly, I know you're working with a ton of people, but you can certainly help at least have that initial conversation with folks. Talk a little bit about, how you're able to help, and then also start talking about what's the process. What do people need to do? Look, they're probably saying to themselves, okay, I'm interested. I need to learn a little bit more. Talk a little bit about the process from here.
Yeah, I mean, I've met with and spoken with many business owners who were struggling to build the successful retirement plans for themselves. They had a great one for their employees, but they just didn't see the same plan for themselves because it couldn't sustain their lifestyle. Those same guys couldn't sell their businesses for the price they thought, or the new owner couldn't get the money needed to buy the business. So, we developed a solution, for solving those problems. I've been doing it for 18 years.
Yeah.
So
we talked in the beginning, about the gift. I know, it's, look, you're working with hundreds of business owners. As you talk more about this, you're getting calls all the time about it. But it's essentially for anybody listening right now, you've taken the time to go through this. The next step is, let's just set up a strategy call. So I know you've set aside some time on your calendar. There may be, I believe, a button somewhere on this page, likely below this video or next to the video, especially if you're watching it on a recording, where click that link, it'll open up Roy's calendar. If there's slots still there, then one of his 30-minute strategy calls are still available, just to have a conversation, right?
Yeah, I mean, just a conversation to see if you're a viable candidate, and see if you qualify. It really doesn't take a whole lot of time, but at least an initial conversation will get us both, moving in the right direction to see whether it makes sense. Again, it doesn't work for everybody, but that's what the call is about. So,
Okay.
We are getting good influx of calls, a lot, especially in the last quarter of the year.
Awesome. So, right now, again, I think the last quarter you said had over like 100 applications.
Yeah.
Because it's becoming more popular. It's becoming, wouldn't say it's becoming mainstream, but guys like, yourself are realizing, look, there's better ways out there. And as business owners learn about this, probably one, pissed off they didn't know about it sooner, but now they have options. So, don't wait till the end of the year to say, okay, I've gone through the year. What's my hit on my taxes? Because it could be too late, right? So if you're watching this right now, you're saying, look, I want to reduce my burden. I want to increase my retirement funds. I don't want to pay those taxes. Just set up a call. No reason to wait. At least you know where you stand moving forward. One, if you qualify, and two, potentially, what kind of strategy you'll be able to put in place. So, yep, a couple instructions there. So again, there should be a link on this page to just click it, book yourself on the calendar. Certainly there's, Roy's number at the bottom there. Again, that should be on this page that you're on right now. So you don't have to worry about writing it down or the email, but keep an open mind, set up the call. There's links on this page to get that set up pretty quickly and easily. Just check the calendar to make sure there are time slots available. If there aren't, I would say, yeah, send an email to Roy. Say, hey, can you just put me on the wait list for the next call, the slot that you have open up. So with that being said, I'm going to open it up for questions at this point. And so I did have some questions come in as we were talking. Yeah, this sounds great. What's the catch? So that's a pretty straightforward question. And I get it, right? So you see some of those numbers, you see 3-4x the conventional amount of money you'd have for retirement. You see paying no taxes. You see no downside to the market. You got to figure there's a catch somewhere. This is too good to be true, potentially. But address that, Roy. Address the is there a catch?
The only catch is keeping an open mind because it's unconventional, and you may have to convince your CPA that it's the right thing. But we can show and prove that this works, has been done in the past. It's IRS approved. Um, there's literally no risks to doing this. Um, you know, it's just unconventional. It's not sexy like the stock market, but it certainly works. So you know, there there really isn't a catch. Again, it's keeping an open mind.
Yep. And so another question: can I bring my accountant on the call?
Certainly, I welcome the CPAs because it usually gets things going right away because the CPAs usually get excited about it and they actually I've had CPAs want to bring this to their other clients once they find out about it. So yeah, bring your CPA. I love to talk to CPAs.
Awesome. Yeah, so I think that's good. So and that's a good point, right? So we talked a lot about tax planning. We talked about maybe why your CPA may not have had this in place already. And it's not to say that this cuts out the CPA by any means. We just, Roy, you guys will work together on it, to put the plan in place in conjunction with what you're doing currently in your business. So this was a question from earlier, but I think, again, it's worth repeating. Collateral for the loan, you said that the retirement plan itself is the collateral for the loan. Is that right?
Yeah, the retirement plan essentially collateralizes the loan.
Okay.
So there's no encumbrances to the business. It's an and you know there's no positioning for liens or anything like that.
Okay. Okay. Awesome. So, well, Roy, I don't see any other questions. I'm going to turn it over to you real quick. Any final words?
No, this is the sort of thing. It does take some time to implement this. So if you can start early in the year and get the process started so it can be implemented and working for you, so that when tax time comes around, you'll have the deductions that you need to take advantage of them. And I certainly I love to talk to business owners and help them solve their problems with cash flow taxes, a lot of other things. We do a lot of other things besides this, but this is one of the ones that really has the most sizzle. So we thought we would use this as our initial webinar.
Awesome. Well, yeah. So, definitely if you've been joining us here, we're going to be doing a lot more webinars here moving forward. So I hope you enjoyed this. Let us know in the feedback as well. What do you want to learn more about? What questions do you have that you would love to have us present, about what's going on in your business that you would just love to have answers for? So definitely stay tuned. Keep an eye on your email. We're going to be hosting these maybe even a couple times a month. So looking forward to see you on future webinars. And Roy, with that being said, I will say have a great rest of the day. Take care, everybody.
Okay, thanks for coming.